All right, let's dive into SanDisk because they just dropped an absolute monster of a quarter that completely crushed expectations. And as you'd expect, the stock went flying. So today, we're going to break down exactly what's going on, why the AI boom is the key catalyst here, and what management's outlook is signaling for what could be a really powerful multi-year earnings cycle.
And I mean, the market's reaction was instant. A jump of over 15% tells you everything you need to know. This wasn't just a good report. No, this was a fundamental reset of expectations. The numbers were just too strong to ignore. So let's look at the headline numbers. Revenue came in at $2.31 billion, a solid beat. But the real story, the part that really got everyone's attention, is the profitability. Non-GAAP earnings per share hit $1.22. That's not just beating guidance, it's blowing past the high end of the company's own forecast. This wasn't just some small, incremental beat, it was a huge statement. And the CEO, David Goeckeler, he framed it perfectly. He said this isn't just about a rising tide lifting all boats. No, he's making it clear that customers are actively choosing SanDisk's technology right as the market is really starting to heat up. So it's a combination of two things, a strong market and really, really good execution.
So what's actually powering these incredible results? Well, it's all about the demand story, and two segments in particular are just accelerating like crazy.
Now, if you look at the breakdown here, you see Edge, that's things like PCs and mobile, is the biggest piece of the pie. Then you have consumer, then data center. And yeah, all of these segments grew, which is great. But honestly, the absolute size here, it doesn't tell the whole story. Okay, this is where you see what's really happening. Look at the rate of growth. Data center and Edge both exploded, up 26% in a single quarter. That kind of jump is absolutely massive, and it points you directly to where this earnings beat is coming from. And management isn't being shy about what's driving this. The CEO directly connects it to this massive wave of AI investment. He's talking about $1 trillion by 2030. And of course, that creates this huge tailwind for exactly what SanDisk sells, those high-capacity, power-efficient, solid-state drives. You know, a strong market is one thing, but you still have to execute. And it looks like SanDisk is just firing on all cylinders, from their technology to their customers and their finances. So at the heart of their competitive advantage is this technology called BiCS8. Just think of it as their latest and greatest chip design. It gives you more storage, it's faster, and it's way more energy efficient, which are basically the three things that these new AI data centers are absolutely desperate for.
And this isn't some far-off future product either. BiCS8 is already 15% of their total shipments, and they're planning to make it the majority by the end of the fiscal year. That shows you just how fast they're ramping up their best tech to meet this new wave of demand.
Now this is a really critical signal from the market. The CEO is saying that customers are so worried about supply that they're trying to lock in long-term deals. That's a huge shift from the usual quarter-to-quarter business. It signals sustained demand and, frankly, pricing power for SanDisk. And the financial side of the house is just as strong. Thanks to all that cash flow, they hit a huge milestone. They're now net cash positive, a full 6 months ahead of schedule. I mean, that's just incredible financial discipline, and it gives them a ton of flexibility. Okay, so Q1 was fantastic, but the real fireworks, believe it or not, are in the forecast. Management's guidance for the next quarter suggests this whole thing is just getting started. Just look at these numbers. Revenue is guided up, which is great, but the margins and the earnings are guided to just explode. Non-GAAP gross margin is forecast to jump over 11 percentage points, and earnings per share, they expect it to more than double. This just screams massive operating leverage and pricing power on the horizon. So what gives them the confidence to guide that high? Well, it comes down to a fundamental shift in the market. For the first time in a while, demand is very clearly and significantly starting to outpace supply. And listen to this, because it's not a short-term thing. The CFO, Luis Vizoso, he said it plainly. They expect this supply-demand imbalance to last through the end of calendar 2026 and probably even longer. For an investor, hearing that, that's an incredibly powerful statement about how long this cycle could run.
So, let's just boil this all down. What are the key takeaways for investors here?
It really comes down to 4 key things. 1. The numbers don't lie. A huge beat and even stronger guidance tell you we're at a major inflection point. 2. AI is the catalyst, no question about it. It's providing a huge structural tailwind. 3. Their strategy, from the BiCS8 tech to locking in customers, is clearly working. And 4, the whole business is riding a very favorable and potentially very long supply-demand imbalance.
All of this really leaves us with one big question. You have their best technology hitting the market at the exact same moment that AI demand is exploding, and supply is tight. So you have to ask yourself, is SanDisk's powerful earnings cycle just getting started?